The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 14th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can make the what the heck I talk about? We can go ahead and oh man, what a total brain fart there. How about that? It means that you and I can find the gift in every set of circumstance that life is going to throw at us. So much for multitasking. In any event, I'm absolutely grateful for your presence here today. I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044 on this wonderful Wednesday. Of course, I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow off about 77 points. She's trading down at 17,465. S&P down a point at 2,002. NASDAQ Composite up 11. Russell 2000 is flat. Gold anything but flat, up 13 bucks, trading 11.78. Silver up 19 pennies at $16.10. Light sweet crude back 28 cents. Leading the charge to the upside and taking a trip is TripAdvisor, up 15 bucks, up 23%. Valiant Pharmaceuticals up 10. BlackRock up about 9 bucks. Allergan up 8. SanDisk up 7. Regeneron up 5. The IBB, I've had a couple requests, some emails to go take a look at that, so we'll do that for sure. Chipotle leading the charge to the downside. Oh my goodness, down 34 buckaroonies out there, 4%. BoFi Holdings, that's down 33 bucks. Priceline off $25 out there. So we'll certainly take a look at that. AutoZone off 7. It's been a wild ride in the markets here this morning. We started off with the NASDAQ really powering things higher and then giving up all those gains. It's gone back to recapture those levels out here, come close to it. If we take a look at the opening range inside of the NQ out here, this is a 10-minute chart. And if we take a look at the open, now this is at 9:30 this morning. So we're just simply taking a look at that opening range between 9:30 and 10 a.m. We're just picking the high, whichever bars you use. This case here, it's 10-minute bars. So the opening range high, 43.62. Any close above that, says the market, or at least says the NQ, wants to move higher. Likewise, the bottom of the opening range out there at 43.41, we saw price begin coming back at 10 o'clock, was able to slice right through it between 10.10 and 10.20 out there. So far, the intra-session low is down at the 43.17 level. Inside the ES Mini, you can see that it has not been able to make its way all the way back to its 930, 950-ish time frame out here in the 2000 level. Doesn't mean that it won't, but let's go check in. Let's get away from these 10-minute charts for the time being, and let's go take a look at probably 2 or 3 things that you and I need to watch throughout the day. And I believe where we're going to start, let me see if this is the chart. No, we're going to start right here. We're going to take a look at the daily chart for the Russell 2000. And the reason that we're going to take a look at that over the last several days, heck, over the last many days out here, weeks, months, you and I have been taking a look at some of these trend lines out here inside of the market. Now, in the Russell 2000 is the weak link out here. It has made its way back into the September 17th time frame. I don't know that it's actually made it. It's been very close. The bottom of the October or September 17th low is 1167, but it's gotten back close enough to that area. And inside the other indices out here, they're basically in that September 17th or even higher out here. But still, as the Russell 2000, that's the weak link. So we want to find out what's going on inside of the weak link. Now, if you are watching me on TigerTV, you're going to see 2 different trend lines inside the daily chart for the Russell. The first one coming off of its highs back here in June. And that's an important trend line because as long as price is able to stay above the shorter term trend line, then what it offers you and I is a promise to head up into that about 1200 area. However, and what we've seen here today, whenever you break a trend, not you specifically, actually you too, but when the market breaks a trend or when price bars break a trend, what you like to see, both bullish and bearish, is price to come back, test it, either reject it or get back inside that trend. Whether it's an uptrend, a downtrend, doesn't really matter. And what took place so far this morning is the markets were, so if you were wondering, the markets were pushing down. Why did they stop where they stopped? What was going on? You probably were not looking at this chart. You were looking at something else. Now, there could be multiple reasons, but I would say that one of the things to take a look at is the breakout of this trend inside the Russell 2000 on its daily time frame. We can see that, to the tick, price came right back. Now, I'm referring to the trend line coming off of the July 17th high. That's the touch point I'm using. I then use the high of August the 18th. We can see that that sliced right on through it held the September 17th high, never closed above it. The very next trading session, the body of that candle, that bearish engulfing, you've got in essence, almost a touch point at September 21st as well. Really good trend line, in my opinion. So we saw price come down, the actual low that we've seen so far inside the Russell 2000 futures contract, 1134.70. So here's the deal. Today, could be tomorrow. If you see a close below 1134.70 today, I don't know what it's going to be like coming into 4 o'clock. I will be with you, though, at 4 p.m. today as I go ahead and take one of the hours for Tom, who is traveling. So we'll be able to take a look, and we will come back and take a look at this chart out here just to see where price is headed at that stage. If price does come back inside that trend, it sort of spells curtains for the market, because the Russell 2000, remember, you and I use the small caps out here as really an indicator, a leading indicator as to where the markets are going to go. They will not be enough to go ahead and drag the markets down. Not a chance. They will not be enough to go ahead and pull the markets up, but they will be out in front, and the bulls or the bears, depending on which direction they're going in, will go ahead and tailgate. They will go ahead and draft right behind what the Russell 2000 is doing. At this stage here, a different chart, something that I share with subscribers out there, suggests that the Russell 2000 is going downtown. It may not be today, it may not be tomorrow, but at this stage of the game, it's headed downtown. Now, price went right down to a support level, bounced off of that. We know what that is to pay attention to and to look at. And if we go switch over from a daily chart, we start going to some shorter term time frames out here. Let's go take a look at that. That's going to be the 30-minute time frame out here. We can see that what price did on this bounce is made it all the way back up to a resistance level of its TAS market profiles. That's the red dash line going across my screen. That's priced out at about the 1147 area. The actual high that we saw, go on. That's all right. I'm talking to my system out here. It actually got up to 1147, even Steven out there. Now, equal distribution between the bottom and the top of the box, the point of control, so it doesn't really provide you and I with much information. What we can say is, hey, look, a close above 1147. Then what we'll see is the highs of earlier this morning at about the 1152 area get tested out here. So we know that on the daily chart, price up against a strong level of support. Thus far it is held. If it fails, it'll be curtains for the Russell 2000. So that's what's going on there. Let's go take a look at what's going on inside the NASDAQ. But instead of going over to the futures contract, I think what you and I can do is go take a look at the actual NDX 100, because it's the NDX 100 that really provides you and I with the next message out here. We'll go take a look at the divergence between the NDX and the NASDAQ composite. If we look at the NDX 100, what you and I can do is we can go take a look at a trend line. So we're going to use the same basic principle out here. And this says we're going to use the high of July 20th. The high of July 20th inside the NDX, its all-time high, was up at the price point of 46.94. The next touch point that I'm using out here is going to be the September 17th level. Now, there's two different trend lines that we can draw. We'll go draw them both in here, but let's just stay with this one. If this is the correct trend line, Because we're going to use two, and we'll go ahead and try to differentiate the little nuance between the two of them. If we use this as the trend line, because somebody might be saying, "Hey, why don't you go ahead and use the high of August 5th?" Well, we will. We'll go ahead and do that. But right now, let's go. I believe 9/17, September 17th, is a much more important swing point or candle or date with regard to what the markets were doing than August the 5th. And that's why I'm going ahead and using that. Now, what the NDX 100 has done a few trading sessions ago, bopped its head. Its October 9th close was just above that trend line. You break a trend line, you like to see price come back, test it, reject it from a bullish side or from the bearish side, test it, get back inside, says, I'm not letting you move higher. I'm going to drag your butt down to lower price, but that is not the case just yet because we saw a test of that trend line yesterday. And if we go ahead and try to explode that candle, what you can also see that yesterday's candle was. So we've got a little bit of divergence here to a certain extent. From a bullish side, price held the trend line. From the bearish side, you've got a key reversal. You've got a shooting star. You've also got a doji candle up here. Now, doji candles, specifically at resistance, have a heck of a lot more meaning than any other place on the chart. Why is that? Because it tells you that it's tired. Something that I never get is tired, not till really late at night out here. As you can tell, I have just a little bit of energy to unwind with you each and every day. But the market itself, it gets tired from time to time. And when it does that, it'll form a doji candle out here. Now, typically, when you see a doji candle at resistance, if you see a lower close, it tells you that the leaves are falling off the tree. And if the leaves are falling off the tree, guess what? It's autumn time, and the leaves are going to continue falling. It's not a one-day exercise out here. What does it mean if you close higher? Doesn't mean diddly. It doesn't mean anything till you get above the resistance, which in this case here is either the high of the doji candle, which also is a key reversal session. So that says the high of yesterday is muy importante. That high of 4399.93 is really critical for the NDX 100. If you see it close above that, that says the September 17th high is going to be tested. That's at 4450, maybe even more than that out here inside of the market. So at this stage here, the NDX 100, if we go take a look at the other trend line, let's go ahead and type one in or place one in here. I didn't mean to do that. What I meant to do was this. I'm going to go ahead and shut that trend line off. We're going to go ahead and create another trend line out here. Let's go ahead and let's see, what color do we want? Come on. Come on, work with me. We're on live television. I'm referring to my trading strategy or my trading system out here. Green line. Yeah, let's use a green line out here. So if we take a look at, well, if we take a look at that trend line and we go ahead and we use that August 5th level, well, then that's interesting, isn't it? So we can put them both on the screen out here because if we use that August 5th high, what we can see is that yesterday's high, yesterday's shooting star, yesterday's doji candle at resistance. I say resistance because of the September 17th swing point. Says, hey, guess what? Guess what, fans? Price never broke above the descending trend line. Something to think about. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Our man Diego de la Vega, otherwise known as Z in our Tiger's Den, would like us to go take a look at XOP. XOP is the Spider S&P Oil and Gas Exploration ETF out here. So as we take a look at this, and really the daily chart, because of the volume or lack of volume inside this, we go down and take a look at a 30-minute chart out here. This time it is good volume. Don't get me wrong out here. But if we go ahead and take a look at the ticker symbol XOP, now what we're going to use out here is we're just simply going to use our TAS market profiles. And let me do this. Let me turn one off and turn one on. I'm going to go, because what's on my system here are multiple time frames. Now, the two time frames that you and I are looking at are daily and weekly. Weekly are going to take precedence over daily. So I'm going to go ahead and turn the weeklies on in my system. Now, what you can see here, what you and I know, one of the secrets behind using these market profiles, and these are natural areas of support and resistance. They're more than natural areas. They are the areas on the charts of lines of demarcation where bulls and bears line up. Sometimes the way that things line up, and you've got three lines. Your top line is going to be resistance. Your bottom line is going to be support. In this case here, it's a dash line. Your center line, and you can use whatever techniques. John Logan likes to have each line with a different color. If I'm using multiple time frames out there, it's easier for me to know that all the green lines happen to be weekly and blue lines are daily and so on and so forth. In this case here, There's also a third line, the point of control. That's where both bulls and bears, buyers and sellers, are most comfortable. It's where we have the most. If you're driving down the street, there's probably one way that you take to work, and there's probably one area where there's always congestion. On a stock chart, sometimes we can identify those congestion areas. When we take a look at our TAS market profiles, congestion areas are nothing more than that point of control. The bottom line is important. Of course, the bottom line everywhere is typically important. In this case here, and using the profiles on a weekly basis, you don't want to see it close below that level. Now, if you do that, that says you're going to fall to the next support area. In this case here, it would be where the dailies would line up, right? You go weekly, daily, then some intraday time period. John likes to use 240. I like to look at 300-minute, 240, 60, whatever it might be. But right now we're focused on, hey, providing Z with some information out here. So he's long this trade. And as long as his stop, I believe, is a relatively tight stop, if we were going to go ahead and take a look at the market profiles out here, I would say to perhaps expand the stop just a tad, because the bottom of that box is 37.41. And if XOP comes down and tests 37.41, and then it can easily bounce off of that. And the reason why I say it would justify expanding the stop just a tad is because that point of control is closer. That little dotted line is closer to the dashed line. And when those two line up like that, what they tell you is that buyers, that is an excellent line of support. Hey, when excellent lines of support get broken, it says, look out. Look out below. And we can go take a look at look out below. But really, Zorro is not that interested in looking out below. It's about getting in this trade. Now, and having both sides covered. Now, I don't know where his potential exit is at, but I would say if, in fact, and I know that he'll go ahead and take a look, because daily chart we're looking at, but weekly profiles, he'll take a look at what's happening as price comes into the October 9th swing point. He'll want to see, or anybody would want to see, if price moves up more than 16 million shares. Look, it doesn't mean that it has to have more than 16 million shares to close above 40.80. It just says you'd sure like to see that. Why? Because then you've got volume, right? You've got, as Tom likes to say, you've got people coming into the store, right? More people coming into the store, more demand. It says that prices can go higher. You know, I opened up, I created a concept back after my travels in Russia back in 1998 was when I started developing the system. That system was where I was able to recreate through 2- and 3-dimensional images inside a solid block of crystal, or any piece of crystal. It didn't have to be a solid block. And I opened up my first store at Disney World. We opened it up just before, we opened up December 18th, 1999, just before the year 2000. Now, when we opened that store up, it had never been seen anywhere in the world, where you could walk up, we'd take your photo, and really instantly we could take that photo, recreate it into a bunch of dots, really like a dot matrix printer, and turn that into an image, your image, inside a solid piece of glass. And people could watch it being done right in front of their eyes. It was magic. It was hocus pocus. Really, all I was doing was using the exact Star Wars system that could shoot missiles out of the sky, out of the air. The same thing that's a part of the defense system that whatever the shield is that we have over in Israel out there. Now, what I will tell you is because of supply and demand, those things were going off the shelves. We couldn't keep up with business. And Disney said, hey, go ahead and increase your prices out there. Well, look, the same kind of thing. If volume is coming in at that swing point, it says price is going to likely go up to 42.77, the top of that weekly profile. That's my view of XOP, the Spider S&P Oil and Gas Exploration ETF. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 100 points right now. S&P is down 2. Russell is just slightly read off $1.40. And so I want to go back. We were taking a look at the NDX earlier. We've got a question inside the Tiger's Den from Tammy about shooting stars, dojis, and so forth out here. So we're going to go ahead and take a look at the NDX chart. Now, what we can take a look at yesterday. So yesterday's candle, let's take a look at that first. Yesterday's candle, how about that? Also, yesterday's candlestick was really both a shooting star and a doji candle out here. And she said, hey, they look the same. Now, they only look the same on yesterday's candle. So what's a doji candle? A doji candle says that where price opens and price closes are the same or virtually the same at the end of the trading session. Now, that trading session can be a 10-minute chart, can be a 30-minute chart. We're looking at a daily chart. It's when that bar closes. In this case here, we're taking a look at a daily chart. Now, a strict interpretation, if you absolutely want to get strict and anal about it, which there's nothing wrong with that, because depending on how you use those candlesticks and the meaning of those candlesticks, they're going to potentially, in your interpretation, is going to impact how it is that you trade. Now, a strict interpretation basically says there's not but a tick or a penny difference in between the open and the close. So if we were to, quite frankly, take a look at yesterday's candle, it doesn't even qualify as a strict interpretation of a doji out there. But I like to use just a little bit of liberal sense. You can't use much. You can't use a small-bodied candle out here, say like this one right here where my cursor is at. Well, let me go ahead and get the crosshair and somehow call the September 4th candle a doji. I mean, if you do, you're getting so liberal that it's going to really screw up your trading or at least the meaning of these candlesticks, and you don't really want to do that. So you can't have a candlestick that is both a shooting star and a doji, but if you take a look at this little doji candle back here on September 22nd, you see where you've got, in essence, the open and the close are the same out here. You know, that doesn't at all look like a shooting star. Now, a shooting star is basically, it's the opposite of the hammer candle. So a hammer candle, as you know, are helpful to identify lows out there or levels of support. Shooting stars are great at identifying levels of resistance. It is always much better for some type of, you see, the bulls and bears have one responsibility to you and I each day. Only one responsibility, and that is to paint candlesticks so that you can understand if it's a continuation, is it a reversal? And then the question is that you need to answer with regard to patterns that you trade out there are, do those candlesticks show up at levels of support or resistance? And it can be any trading system that you use out there. It can be wave counting. It can be A to B equals CD. It can be trend lines, which is really what you and I were taking a look at here earlier in the day. So when a reversal candle, bearish reversal candle, which is a shooting star, shows up, that's got to make you say, something to think about, because an area of resistance was truly an area of resistance that the bulls and the bears, the buyers and the sellers, saw out there, because they went ahead and they created that candle for you and I. That says it's an important level of resistance. So we take a look at this trend line. If I go ahead, I'll also go ahead and try and let me see here. What do I do here? Let me just do this. I think it's shift 2, but let me just function 2. That's what it is. So if we go ahead and we draw that resistance line in here, and again, now I'm using the August 5th top out there. We can see how price bumped its head right up against resistance and then went ahead and gave you a bearish reversal signal. It also, in this case here, you know, it had to finish one. Yeah, it did. Okay, so as we blow this up, see how this was just one tick red, in essence, to the downside out here? That went ahead and also gave it a key reversal, so made it a key reversal session. Now, a key reversal session is not a Japanese candlestick. Instead, it's an American, it's a Western terminology out here. It is when price of the current day exceeds both the high and low of the prior session. Well, it does that. It has to occur at an extended condition. So when you see an extended condition can be the completion of an A to B equals CD pattern. It can be a huge move up in one direction or the other, which you can then interpret by taking a look at the relative strength indicator at the high or the relative weakness indicator at the low out here. In this case here, I would say the NDX, because of the way that we came off that bottom September 29th, you know, the market was in extended condition. And that also says, hey, this is very strong resistance. That would also say that if price closes above that shooting star out there, which also happened to be the swing point of September 17th. Now, if you look at that September 17th candle, that's not a shooting star. So I believe that, Tammy, you were saying that, hey, maybe you were confused because of that candle. That's not a shooting star if you were looking at September 17th. That was nothing more than a test of a swing point out here, what I consider to be a relatively significant swing point. And the reason is, I believe I've shared this with you before, because September 17th was when the New York Stock Exchange was able to get its price oscillator up above 150, and then it sold off from there, and it sold off in a big way. And typically, when I say typically, when the price oscillator gets above 150 and it sells off, that because its meaning is that we're going to higher price out there. It did not happen in the New York Stock Exchange, which is the better swath of the market to provide you and I with an important piece of information. So in this case here, price just got back into a swing point. It rejected that swing point by closing below the low of that September 17th area, and that was at 43.68. So these candles are really important. They're very helpful to you and I, especially when you're taking a look at levels of support or resistance. And the reason that was not a shooting star, by the way, on September 17th, is the wick of that candle at the bottom was just too much wick. It just you can have a little wick. It's really close on this trading session here on July 7th. But see, that wick is a tad smaller than the one out here on the trading day of September 17th. So that candle doesn't mean jack. Whatever that means, it doesn't really mean anything to you and I, other than it's a swing point. We had a failure at a swing point. So, Tammy, I hope that helps you out. But if not, then tell me so, because my challenge is to be able to explain this so that each of you understand what these things mean and how it is that you can use them, how we can use them in our trading. Knowing candlesticks is the most important thing that you can do for yourself, because imagine trying to speak a language or trying to, it's like moving to Japan and not spending time to learn the language, at least basic elements out here, like how to say hello and thank you and you're welcome. And there's different mnemonic ways for you to do that. When it comes to saying you're welcome, which most people know how to say thank you, but most people don't know how to say you're welcome. I can teach you how to say you're welcome. I just use mnemonics out here, and it's why karamashita. And I always think of why cut the mustard. If you can always remember why cut the mustard, for some reason I can remember that, then if you say it fast enough, somebody on the other end is going to be able to figure out that you just said, you're welcome. In any event, we've got a request out here to go take a look at Regeneron. In fact, we've got requests all over the board to go take a look at what's going on inside the IBB. I don't know where all this is coming from, but let's go take a look at it. Now, when we take a look at, let's go over to this tab right here, because I think we've got the top 10 holdings inside of the IBB. But first, so let's take a look at the IBB and see what it's doing out here. So as we go ahead and pull up RGEN, so not Regeneron. Okay, sorry about that, Pete. We'll do RGEN as soon as we do the IBB out here. So and a couple of stocks with inside it. So as we take a look at the IBB, there's really two key swing points for us to pay attention. Let me go ahead and turn off some of the lines, because otherwise, clutter is no good out here, and so I don't want to clutter you up. So there's two key swing points that the IBB is trading into that we've got to pay attention to. August 24th, which none of us really know how real that is because of the moves that we had. Look, it's real. It's there. There were trades that fired off. But if we take, and so therefore, the high of that swing point is important. The high of August 24th is 340.23. If the IBB is really going to go ahead and rear its head and start heading north, it needs to clear that level. It's nowhere near that area. That says, let's take a look at the next swing point out here that formed back on September 28th with 11 million shares to the downside, the bottom of which has not been tested. By the way, that August 24th was 4.8 million shares. So quite frankly, September 28th is, in my opinion, even more important than the August 24th candle session out here. Now, that says that the high of the IBB from the trading day of September 28th is really important for you. 308 even Steven. What the IBB has done today is it got up to 307.44. If it closes above 308, it then offers the opportunity for price to at least go up and test. Let me get rid of these retracement levels. We don't need those. Okay. At least go test this swing point out here from October 5th. Now, October 5th has got volume of 3.4 million shares. And the bottom of that is 308.66. And the top so far today of our swing point, 307.44, our candle. So it hasn't tested it. But what we can say is price is moving into it with volume. You're pushing into a swing point, haven't gotten up there, and you're doing it with volume. Says to me that the IBB is going to go test 308.66. And if it can get inside 308.66, says that it can go test the 323.59 level. So that's just taking a look at back to that volume, back to where it's pushing volume, and it needs to clear 308 in order to be able to do that. Now, if we go put our market profiles back on our system out here, we can see that price today got to that point of control. Now, that point of control is closer. Let me go ahead and do this. Let me turn off the trend lines out here. That way this will show up. We're looking at the daily box out here. So just like the opposite of what you and I looked at in XOP, in the daily box of the IBB, the point of control is closer to the resistance line, the top line out there. That says that sellers are lined up at 315.22 to sell the holy heck out of the IBB. No, what it really says is that's a very significant line of resistance out here. So for those that were long the IBB, which is the emails that were in here, what you need, it's likely that the IBB, because it's pushing higher, is going to get to 315.22. The question is going to be, can it really clear that level? And I don't know. If it does, then that is short-term bullish, and you ought to see it move up into about the 330.810. 810. What are you talking about? What do we need? 3 decimals out here? 330.81. So that's in the IBB. Now, we'll go back and take a look at some of the issues that trade, some of the top 10 holdings inside there. But first, let's go to our man Peak D and take a look at RGEN. And let's go see what that is, because that's not Regeneron. That instead is Repligen Corp out here. Now, you got to tell me, are you long? Are you short? What are you looking to do inside of Repligen? And that'll go ahead and assist me with what it is that you're looking at. But we'll just go ahead and take a look at the chart with just a clean slate out here. Now, as we take a look at this equity, he does not own it and is just looking at it. So that's a beautiful thing. So let's go take a look at it with him. We can see that in the case of RGEN, we can see that price has recently come back to an area where it broke out. Now, that breakout day with wide price spread and accelerated volume, that's from the trading session of March 13th, 2.2 million shares. And as prices move back there, it's moved back with light volume, all the way down with light volume. Now, it's trading below that level. But you see, when you take a look at a breakout, when you see a wide-ranging bar and wide price spread, what you like to do is come back a few bars, because the real breakout began typically a few bars back. And typically what you're looking at is a really low volume day, or the previous swing point. Well, the way that things line up here, the real low volume day in this equity was March the 10th. And if we draw a red line around the bottom of March the 10th out here, I believe, yeah, March the 10th, what we're going to see is prices at the 24.75 level. So if somebody were looking to get long at this would be the spot to do it. We can also see a high volume bar, another breakout area that is just a little bit further back on January 8th, the top of which is really right around this 24.75 level. And that had volume of where is it? Come on, work with me, work with me. There we go, 1.2 million shares out here. So price has really come back into a breakout area. Now, if price starts to fall apart from here, which it can, then price is going to come probably all the way back down to the lows of about $19.02. That would be where you would go ahead and place the trade out here. Now, if we take a look at A to B equals CD patterns out here, your A point inside this equity looks like it's up about the high on June 29th. Your B point is going to be the swing. This naturally fits your eye down on that August 24th low, and your C point looks like it's up here around September the 17th. We can also see that it's completed a 1-to-1 A to B equals CD to the downside. But hey, guess what? That C to D leg is even stronger to the downside than that A to B, and that says, hey, price is more likely than not going to go ahead and make a target of 21.05 unless we see some other kind of sign of strength. And that says, you know what? Maybe I ought not enter here, or maybe I should make sure that the IBB, I'm assuming that this is with inside, I don't know, Repligen, is this a biotech company without me having to actually look it up? I don't know if it is. But whatever sector it's in, yes, it is. Okay. Whatever sector it's in, you want to get, look, you got to get the market right, okay? Because that's going to influence what individual stocks do. Not the total influencing factor. Number two, you got to get the sector right. Well, we just looked at the sector in the IBB, and we said, hey, it maybe has some bounce in there, but don't, it's not exactly in full bullish notation, and motivation out there. So this says, this is pulled back nicely with light volume. But you know what? Why don't you let it come back into the $21 area, maybe all the way back into that breakout level from January the 8th out there. That's my take when we take a look at Repligen Corp. Sign of strength to the upside, I would change my mind altogether. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. You know, we were talking about shooting stars and dojis a little while ago. If we take a look at the 10-minute chart for the ES Mini out here, we can see that this morning, well, not this morning, this was at, this morning, 10:10 a.m. We can see that his price made a high out here. We can see a nice little bearish engulfing candle follow through to the downside. That just also helped us to understand where the sellers were lined up. And what we can see here is while we were on the air at 1 o'clock, while we were coming on the air at 1 o'clock, price had moved off of the lows in the 1985 level. And on a 10-minute chart, that's what you and I are looking at, formed a combination, just like we looked at in the NDX 100 from yesterday on its daily chart, formed that same shooting star doji candle out here. Now, a doji candle, why does Stevie say that doji candles mean more at highs than they do at lows? The definition of a doji, I already gave you the technical definition, right? The open and close are the same or virtually the same. And that's so, and when you have that, the significance is that it means that the market is tired. Now, when the market comes into a resistance area and it starts, it's kind of like working out. For those of you that work out, or those of you that have worked out, or those of you that have exerted a lot of energy at one point in time, maybe it's playing a sport, any of those elements out there, when you've really pushed yourself, you push yourself to the max, right? That means you're getting back to a resistance level that you once were at once before. You typically create your own internal doji, right? Eventually, you just tire out. And that is, in essence, what the message of the market is doing. When it gets back to a resistance level, and then it can't go anymore, right? The open and close of the candle is virtually the same out here. It's telling you that it's tired. Now, when the market is moving down, okay, so picture yourself from that workout, you're winding down, and it comes down to a level where, your heart continues to get lower and lower, and it creates this little doji candle. Look, you can continue to rest more and more and more. You can finally lay down. You can go horizontal and so forth. Doji candles down at support levels, they don't mean anything. I can't say they don't mean anything. They don't mean anything to Stevie because they have more significance when the market is moving higher out here. And when it gets into a resistance area and it's tired, it's communicating something to you. You can get more and more tired as things are already going down. That's my take on the doji out here. So, folks, as we end the session today here at 2 p.m., stay tuned. David White is coming up next. He's going to have an extraordinary workshop tonight. So if you haven't had a chance to sign up for that, look, I think David White is one of the smartest guys in the world out here. So he has extraordinary gifts, extraordinary information that he can share with you. And it's a course that you'll want to take, even if you don't trade options out here. This is a course that you want to take. It's pretty easy to sign up for it. All you got to do is come over, give his newsletter a shot, give it a try. You can do that. That's pretty easy for 30 days out there. And you're going to be able to enter a class. And look, if you're not around tonight because you're doing something else, hey, that's cool, because you can have it archived on your members page out here. So look, if you're not growing, you're what? You're dying. And TFNN is all about education. As some folks have said in the den, some of the most extraordinary technical education that you can get about trading and investing. And you're getting it from all different types of people, each of us having our own beliefs about what it is that we read, but that when we interpret, we take a look at the stock market. I use a doji different than maybe David White or Tom or Larry or Basil or anybody else uses it. But I explain to you why I do it. David White's going to explain to you all about the options marketplace. So come on over and stay tuned because he's going to be up next. But come on over, sign up for it. You'll enjoy it. And I'll see you again at 3 o'clock when I fill in for Tom. We'll go back. We'll take a look at the Russell 2000, see what it's doing then. If I don't see you at 3, have a great day. And look forward to seeing you tomorrow. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.